Hello traders, Gary Wagner here just after 12 noon in Honolulu, 6 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is April the 6th, 2018, and this is the Daily Report for Gold and Silver, our weekend review. And what a week we have seen. Gold finishing up on a strong note, but having extreme volatility throughout the week, closing up about $8.80 at $13.3730. Silver, tepid at best, closing up about 1 cent, $16.36, and the U.S. dollar under some pressure today, losing 32 points at 89.82. But all of that dwarfed in comparison to a tumbling Dow Jones Industrial Average, losing yet another 500 plus points, down 572 at 23,932, and Bitcoin futures continues to fall, getting closer to our target of 6,000, 6610 and 6590 collectively in the CME and CBOE futures exchanges. Traders, gold futures close moderately higher today, up $8.80 at $13.3730, and that is after trading to a new low this morning at $13.22. We can see that this was the lowest trading point this week and a dynamic recovery that followed. The initial move to the downside was created right after the jobs report was released, showing some steady growth in terms of jobs itself. However, statements made by President Trump ordered the administration to take a look at an additional set of tariffs, and an immediate response by the Chinese government sent gold prices sharply higher and caused the Dow Jones Industrial Average to tumble. The Dow Jones Industrial Average lost 572 points, closing below 24,000 once again at 23,932. The only positive caveat to today's sharply lower pricing was the fact that it has remained above this long-term 200-day moving average. In terms of our activity this week, we were in fact stopped out the other day when market forces did take gold pricing lower. That is right in here. We had a stop sitting at $13.30. The market hit that stop yesterday as statements made by the newly appointed chief economist of the White House, Larry Kudlow, calmed the markets, and then statements today by President Trump once again ignited gold prices and caused a strong sell-off in U.S. equities. Now, I do have to take responsibility for us getting stopped out yesterday, in that the stop that I placed at $13.30 put us squarely below the 50-day moving average. However, we are in times of extreme price swings and volatility, and we would have had to have our stop sitting at $13.17 or below to avoid being stopped out yesterday or today. I am still extremely bullish overall in gold. I believe that we will see gold go back and actually challenge current resistance, which resides at approximately $13.65. And if the current trade dispute between China and the United States morphs into a full-blown trade war, believe that we will see substantially higher pricing. Obviously, we first need to take out these tops at $13.65, but my belief right now in my forecast is looking for gold to go to anywhere between $13.85 and $14.35 if the current trade dispute becomes a out-and-out trade war. Therefore, we will look to reposition ourselves from the long side in gold, hopefully find some sort of a dip here, but regardless whether we buy on a dip or a breakout, be highly cognizant of stop placement to account for the extreme price swings evident in the market lately. Traders, as far as silver goes, it has been lethargic at best. It seems to be reflective of the fact that it is an industrial metal and has come under great pressure when U.S. equities have sold off and when safe haven assets come to the front of the line, so to speak. Silver is not one of those metals that seems to benefit from that push of safe haven assets. Therefore, I remain cautiously neutral, and that can only change once silver's price trades above the 50-day moving average. And more importantly, we see the 50-day moving average gain some headway and inevitably move above the 200-day moving average, creating a golden cross. Until that point, I am on the sidelines. And traders, I remain bearish in terms of Bitcoin Cash and Bitcoin futures. Bitcoin closed down about $170 today at $65.90. The key is, except for Tuesday's action right in here, we have seen a steady and methodical decline in terms of pricing. In fact, we identified on a 720-minute chart a simple 3-day pattern, which is known as a three-river evening star. Let me go ahead and highlight that for you. That would be right here. We then had our confirming candle come in on the following cycle. This type of candlestick chart breaks each trading day into 2 candles, and then we had a methodical decline lower. Based upon our analysis, I do believe that there is a high likelihood that we will see Bitcoin Cash as well as Bitcoin futures make a play for $6,000, which is the lowest trading point since futures trading began for the cryptocurrencies in December of last year. Traders, we are living in most interesting times. Never before have I seen such a brutal oscillation between an extremely bullish market sentiment to an extremely bearish market sentiment, just to repeat that cycle over the next couple of days. The current trade dispute between China and the United States could in fact evolve into a full-blown trade war. As long as that is on current financial plates, I think we're going to see increased volatility. Traders, remember, superpowers don't blink. And for that reason, I expect this current dilemma to get much worse before it gets better. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.